Good morning, everyone. Insert eye roll from Jen. Yes, I know it's not morning everywhere, and I know it's not morning when a lot of you are catching us in syndication, either watching or listening to our podcast. But I'm Adam Smith. I'm back with another episode of How I Met Your Mortgage. With me, as usual, is our marketing director, Jen Waybower. Good morning, Jen.
Good morning. It's not morning for our guest.
It's not morning for our guest, but I'll introduce him momentarily. Good afternoon. Andrew Cady is with us today. Hey, Andrew.
Hello, sir. How are you?
Good. Yeah, so I know we talked about this a little before we went live, but yeah, I was going through Facebook memories this morning, and it has been 364 days since we had you on the podcast.
Yes, 364 days later, here I am again.
Yeah.
Still alive, still kicking, still with a smile on my face.
A little bit more gray in the sideburns.
Oh, man.
There.
It's getting bad.
All right. For those of you listening to the podcast, we do this as a video cast to begin, so feel free to go to our Facebook page and check out Andrew's gray hair, and you can join along in the fun and jokes. So, Andrew... as we were talking about before we went live, it's been an interesting year for everybody, no question. And Jen and I have kind of gotten used to the fact that you're like this workhorse, that you're just, slugged up on petrol and caffeine and so on and so forth, and working 26 hours a day and, generating more business than... not necessarily more business than anybody that we have on the show or that kind of thing, but having a trajectory going year over year, creating more business for yourself year over year. But I think, if I'm not mistaken, 21 kind of brought some real insights to you, and there's been for you. And I've noticed you've had a lot of chatter recently about how we spent all this time glorifying the 60-hour work week and the hustle and the hustle and the hustle. And we all kind of lost sight of quality of life. And It seems you've come to terms with a lot of that this year, yeah?
Yeah. It's definitely, I don't know whether I would say my eyes have been open to it or just circumstances of life have kind of forced that upon me. You said it right. That's just my nature, is to be the grinder, the worker, the hustler. I love that get up in the morning and get going, but it's also equally important that, not only do we leave a lasting legacy financially for our families, but we're not missing in action to do that.
Well, yeah, I would say that that's true. And I do agree that there is some methodology and some logic behind establishing financial security, no question. But I think the big piece of the puzzle here is that while we're all working so hard to do that for our family, we're actually missing the day-to-day of what our family is doing, evolving, changing, working on themselves, growth, development, just natural maturation, so on and so forth. And yeah, I think there's got to be a balance in there somewhere.
Yeah, there absolutely has to be. I had someone say it to me, and I don't know, you can have people say things that, 24 different ways, and then finally somebody says it in a way that kind of hits you in a different way. And that's, someone told me and basically said, at the end of the day, when you're laying on your deathbed, it's not going to be your business partners, your referral partners, your colleagues, or even your cigar buddies that are going to be sitting beside you on your deathbed. It's going to be your family. And the only way that they're actually going to sit beside you is if you haven't been completely missing in action along the way. And I'm young. I'm young. I have all this ahead of me, but I'm also a very young father. I've got kids that are in their late teenage stage now. And, I kind of came into the mortgage industry, guns ablazes in 2015, and had kind of a do or die mentality because I'd been very accustomed to a healthy lifestyle, and that lifestyle was gone overnight. And so I had really no choice but to get in and really grind hard. But the entire time I did it, I really never lost focus of the fact that this was a place and time that wouldn't stay. My entire goal was to build the book of business and build the team to the point where I could take a step back. And as we all say, we work to live, we don't live to work. And I feel like that's kind of the phase I'm entering into is, building the team that I can trust to work with my clients as if it was me working with them, so I don't have to be present 24/7.
Yeah, it's nice, isn't it?
It's exciting. I mean, you've been hounding me for this for a long time.
Just a few years, yeah. It's been a while, no question. Well, let's talk about it. So over the course of the year, since we've had you on the podcast last, what has changed? Tell us, obviously, for those of you watching or listening live or in syndication, there are two big focuses here at Just the Tips. One is lead gen and all the things that encompass that: contact management and databases and social media and video and on and on. But it lays the groundwork for the other big piece of the puzzle, which is team structure. You need operations help. You need sales help. The idea, of course, is to be able to build a business that you can walk away from while it still pays you. And this has obviously been a big year in that development for you.
It is. A year ago, I was deep in the throes of building the team, and that's really where we've come from. I want to say a year ago today, I had 1, 2, 3 people on the team, and now we have 7 on the team.
That's a big year.
We've kind of got to the point where, we have the business, and some of it takes time. You need to hire at the appropriate time, but you also can't hire too early or you just bankrupt yourself. So there comes that very fine line of hiring at the right time and definitely hiring before you need it, forecasting your future to see when that need is going to be there, and putting rear ends in seats so they can be properly trained in time for that influx of business.
Yeah, that's certainly true. We're actually, I would say that our little operation here in Colorado is probably always hiring. I mean, we hire slow and we fire fast. So I'd say as soon as we've got somebody that we like, they're in the groove, they fill the role appropriately that we wanted to fill, we are pretty much looking for the next person almost immediately, and just one at a time. Again, we hire slow and fire fast. And I think it lends to slow, consistent, steady growth. We're doing this for a much bigger long-term picture. But it's funny because one of the people that we're contemplating, that we're considering right now, she had been working for a mortgage company, and I don't know if it was a brokerage or if it was a banker, retail versus wholesale, blah, blah, blah. But they got really busy during the course of the pandemic, as we all did. And they decided to grow a little too big, a little too fast, and ended up having to lay people off. And in my mind, that's just a big no-no. If you are not certain enough about the future, your growth, your development, your ability to spend your time wisely bringing in more business, while other people that you're hiring or have hired are doing the work that's a byproduct of that, and you've got to lay people off as a result, I think you're failing. I think that's just grossly unfair to whoever you're bringing onto your team and to the rest of your team.
100% agree. I think not only that, but it also takes your focus and your energy and puts it into something that's short term. You're spending so much time and energy training that person only to not keep them or to lay them off because your foresight wasn't there. It's definitely a delicate balance. Like, to me, that'd be the biggest gut shot of all, was to convince someone to leave a company to join my company based on all these amazing things I say, only then to have to lay them off 45, 60, 90 days later because I could not perform on what I had promised them. It'd probably be the biggest gut shot to me personally. So I'm kind of the frame of mind that you are, except I hire slower and fire fast. I hire really, really slow. I spend a lot of time projections, looking at the future, looking at the relationships I have, where new business is going to be coming from, what percentage of my business is coming from past client referrals. And I start to really nail down where we're going to need people. And it's honestly, we work in such a short cycled business that it would almost be negligent to not see the writing on the wall. I mean, we look at, we're in a 90-day cycle business. Some of us, depending on our market, 120-day cycle business. If today my credit reports are 30% more than they were last week, that should raise a red flag. And then if next week they're still holding that number, then I need to prepare for a 30% increase in the number of loans I'm closing within 90 days. And so we do have this very, very amazing lead indicator of credit pulls.
Sure.
Because the application is about 90 days out in our market with how tight inventory is, 90 to 120 days away from closing.
Let's back up a little bit for our audience and make sure that everybody's kind of got a grip on the fact that the vast majority, if not 100% of your business is purchase business, right?
Yeah, last year I did 406 transactions and only 17 of them are refinances.
Okay, so go on. I just want to make sure that everybody understands why we're talking so hot and heavy about a 90, 120-day cycle.
Yeah, and for me, refinance business is an amazing business, but there's not a lot of longevity in refinances. It's kind of it's a flash in the pan. It's just, when the market hits. And I would have, gone really, really deep into refinances last year, but my purchase business was up 110% year over year. And so I was scaling my team as fast as I could to continue the quality output that we require.
That's a big deal right there. Quality output.
Yeah. And at some point we started just turning away all refinance business because it's not what the team was set up and used to. So it did, even though a refinance transaction is very simple, it somewhat felt like a wrench in the wheel because it wasn't just following the flow of what we do every day. And with purchase businesses up as much as it was, it made sense for us to walk away from the refinance business altogether and focus really on relationships at a time when a lot of loan officers were neglecting relationships to catch the low-hanging fruit.
Well, and I think that there's an important piece here that had crossed my mind over the last, 5 or 10 minutes now, that one, those relationships are a big deal. The type of business is a big deal. But when we circle back to scaling appropriately, bringing people on without running the risk of having to lay people off in the future, we're at a position, and I think you exemplify this and certainly expressed it perfectly. We would rather turn business away to another source where they're going to be well taken care of course, than take the business on and not be able to service them properly.
100% agree. Yeah, the moment, and that's where I started to feel the pressure, rolling into February, March this year, and ended up scaling back some of my purchase business and moving away from a couple big relationships because it got to the point, we work, Adam, you and me, we work in a very, very highly skilled industry. Whereas, for instance, on the real estate agent side, get their license and there's not a lot of technical skill it takes to get a listing on the MLS and to sell that listing. Some are better than others, yes. But in the mortgage industry, just the amount of guidelines, just the fact that you have over 1,000 pages of guidelines for an FHA loan, it's not like it's an industry where we can just hire someone and have them out on the street working in 30 days.
Hardly.
And it takes a lot of time to train the people right. And so it makes it a business where we're not as easy to scale in mass scale. And so I found myself in February, March of this year, I think I did 56 units in a month and 56 houses closing in a month, 100% purchase. And I found myself to the point where it was like, okay, we've grown, but where we're at is not sustainable to deliver the quality we're looking for. I'd rather move away from that just a little bit to make sure I can scale my team effectively so we're putting out phenomenal quality and phenomenal experience so we retain the business we get. The last thing I want is to get all this business and then lose all the business. I know loan officers like that. They have the biggest mouth in the world. They can sell ice to an Eskimo, but they lose that relationship 2 months later because the clients are complaining on every single transaction. So it's a fine balance you have to have.
Well, and I think part of what makes the most successful people pretty much in any sales arena mortgages, real estate, cars, insurance, anything direct to consumer for large ticket items anyway, is being client centric. If we're putting the client first above all else, then that's really all you need to do. The rest of this shit falls into place.
It does, and every loan officer has a different model. Some are consumer direct. This obviously wouldn't apply to them. For me, I'm very heavy on referral partners business, on getting referrals in. I'm very much a referral based business, and it's an interesting paradigm because you're in that type of setup where it's referral partner based. You're actually selling business to business, but you're servicing business to consumer. You're selling B2B, you're servicing B2C. And if you handle your B2C relationships correctly, your B2B relationships will always remain strong. And so there's not actually a ton of service that even needs to be given B2B. As long as the clients, the B2C is handled extremely well, the B2B just continues to roll, and that cycle can snowball because we work in a very blessed industry that has a little thing called a listing agent on almost every transaction.
That's right. We can pick up a referral partner on every deal.
I know, it's amazing.
It is amazing. Yeah, no question about that. And don't get me wrong, that does hold true for the consumer as well. A lot of us operate in a strict referral environment where it's client referrals rather than B2B referrals. So yeah, again, if the output is top notch, then you're going to see both. No matter who you are, no matter what you sell, no matter where your skill set lies, if you are taking good care of the consumer, then you should be seeing an increase in your consumer referrals, and you should be seeing an increase in the B2B referrals from the sources that referred them to you in the first place.
Agreed.
Yeah, good stuff. No question. I think that really starts to play importantly with, say, Jen's generation. Because Jen's not going to just believe her real estate agent when he or she says, you got to use Andrew. He's a badass. He's the best there is. He's much younger than he looks. Don't let the sideburns fool you. And Jen isn't going to fall into that trusted authority cycle anymore. She's going to go do a little digging on you. And sure as shit, she's going to come up with the exact same things consumers are saying about you that her real estate agent said about you. Exactly. Go figure. Because of the quality of the work output.
Yeah. So, one thing I've been fascinated with lately is this kind of, so I also own a photography company. And one thing that we've gone through over the past couple of years is this transformation of storytelling and starting to really understand and this is the consumer market we work in today. Consumers are not necessarily seeking the best, the cheapest, or McDonald's hamburgers to be better than they were. They're used to what the product is. But the society we live in today, they're looking for a story and they're looking for an experience. It's all about story and experience. And if you can dial in the story of why you do what you do, even if it's internally, that will perpetuate into the experience you can give your client. If you can give a client the exact same mortgage that they could get by going to Quicken.com, the same terms, same 30 years, same pieces of paper they're going to sign at the closing table, but you can give them an experience not only that's pleasurable, but an experience that wows them. That's something that they're like, wow, deliver balloons and champagne glasses at quarter to close in their office. So their office partners are walking by saying, who brought you flowers or who bought the balloons? Oh, my mortgage guy did. No one. Create this story that people will talk about to their friends. We'll talk about at the barbecue. We'll talk about here, and you're going to have more business than you know what to do with. You're going to find yourself in that situation needing to scale your team faster, or actually getting to the point where you turn away business because you can't let that experience slide.
Okay, now, I agree with you. Jen and I agree with you. And pretty much everybody who's operating in a strict repeat and referral environment agrees with you. But let's not pull any punches. While it's not as dramatic as it has been in past years, decades, there is still some consumer mindset about you, about me, about the real estate agent, about the car sales guy, about the insurance agent, where it's a commodity. The Burger King hamburger and the McDonald's hamburger are the same fucking product. This one's 5 cents cheaper. That's the one I'm going to buy.
Except one tastes like shit and one doesn't.
Well, yeah, but now we're talking about the consumer.
No, and I get you. And our business is highly commoditized. And you're always going to have those people that all they care about is rate. And one of my favorite things one of my favorite things that I've seen cross my desk actually over the weekend, and it just wowed me, was a colleague of mine at my mortgage company put together this checklist, and I could try and find it, but my emails will start dinging. But it basically, when you get that client, you're basically sending them back an email with a list of about 6 or 7 different things and asking them to rate on a scale of 1 to 10, 10 being the most important, how these items rank in importance for them. Being available outside of 9 to 5, Monday through Friday. And there's this laundry list of things. And when they email back, if any one of those things ranks over a 3, the response is excellent. Because you've ranked this, this, and this over a 3, then I'm definitely going to be the loan officer you're looking for. And actually driving that client towards the experience. You're not going to win every one. No one is going to. There's always someone that will do it cheaper. But there's also probably the exact same client that's doing that is going to get their full back tattoo done, and they're Googling the cheapest tattoo artist in town. And they've got to live with that shit for 30 years. If they're happy with it, go with it. I don't care. I'm not going to win every deal, but I'll be darned if I don't give it a shot and try.
Well, and I think it also helps from a vetting perspective of, are these the kinds of clients I want to work with? Are these the kinds of clients that I want referring me other clients? Because we all know a person is the direct result of the 5 people they spend the most time with. So if we're dealing with somebody who doesn't have the intuition, the foresight, the ability to understand how big, how important, how specialized this is, especially right now, then they're going to refer a bunch of people to you that are going to behave in the exact same way and want the Burger King hamburger because it's 5 cents cheaper.
Exactly why I don't do renovation loans. I hate them. Whoa. I hate everything about them. I hate the process. Yeah. And if I do one, then that client's going to refer me 3 more. Yep. And I just don't want to make my bed in a space that I am not happy with.
Yeah, we're going to have to get John David Adams on the show to talk about
He's booked for January.
I send John every single renovation lead I get because it's just not a product I want to do.
So I agree with you. And with our coaching clients, particularly the real estate agents, and even more so the newer ones, we talk about this a lot because one of the lead gen ideas that pretty much every one of them comes up with and wants to explore is first-time homebuyer classes. And I love first-time homebuyer classes, the idea of it. I love first-time homebuyers. The intrinsic reward of sliding keys across the table to a first-time homebuyer is huge. You can't put a price on it. It grossly outweighs any commission anybody's making on that deal. But, again, people are the direct result of the people they spend the most time with. First-time home buyers are difficult transactions. A lot of them are pushing the envelope of what they qualify for. A lot of them are being pushed out of the market with what's gone on as of late. A lot of them need down payment assistance. A lot of them have lower credit scores because they don't have a mortgage history helping to bolster that up, so on and so forth. So they are more difficult, more time-consuming, more brain-damaging transactions. Do you want to build a career out of transactions like that? So, yeah, I get it.
Are we going to turn away someone because they're a first-time home buyer? Absolutely not.
No, of course not.
But are we going to actively go out and target renovation loans, first-time home buyer down payment assistance programs, construction to permanent programs? No. I'm not targeting that audience.
Agree.
And
once you have part of that audience, you're not nurturing it as much as you would others.
Agreed 100%. Like that's why I target VA loans as much as I do. Some people say they're difficult. I don't think they're difficult, but you also have some of the most organized clients on earth that are used to, for a living, taking orders. It amazes me. I'll send a veteran client a list of 12 documents I need, and I'm going to get a zip file back with 12 subfolders in order in which I requested them 24 hours later. And I'm like, can you imagine a client actually sending all pages of their bank statement when you ask for it? Welcome to a VA client. They're used to taking an order and fulfilling an order, and it is the most pleasurable experience. So give me all the VA buyers in the world.
Well, but I want to know who and why we're saying VA loans are more difficult. Hopefully some people
that's the stigma that's out
chime
there.
in on that. Well, I know there's a stigma in the real estate community about them, although I don't understand why. And obviously we've got some, renowned experts that have tried to teach the masses as to why there is no reason, no difference. If for all the real estate agents out there, if I'm selling my house, I don't care who's insuring the money. I don't really care where it's coming from. 100% coming from the bank and the VA's insuring it, great. 50% coming from the bank and Fannie Mae's insuring it, the other 50% is coming from the buyer, fine. I just want my money. I don't care where it comes from. A dollar's a dollar.
I saw this statistic last week, and it says nationally VA purchase loans, the funding rate of the loans that had started was 72%. That is 4% higher than the funding rate of conventional loans.
How about that?
VA loans have a 4% higher chance of actually hitting a closing table than a conventional loan. And that's a national statistic.
That is fascinating. Not a surprise.
No, it's not, because you have very, very studious clients. You also have the highest average median FICO score. You have the highest average assets in the bank. You have a lot of benefits to VA loans.
So why do you think there are people in our immediate community, in the loan origination community, who think those loans are more difficult?
Probably because they do, for me, I look at it, it was the funniest thing, and I'm going to tie these two together, so bear with me for a second. I saw this real estate agent comment. A real estate agent asked a question about a lender, and a lender came on there and commented and said, I'd love to work with you. I don't hand any of my business off to any teammate. I handle every aspect of my business the same. You'll have one contact point. Great selling point, except for when you look up this loan officer's business, and she's done 22 transactions in the last 14 months. And I look at that and I say, if I'm doing an average of 40 transactions a month, I am seeing scenarios that kind lady sees once every 14 months. I'm seeing it twice a month. And I think your people in the loan officer space that have that stigma, it's because they simply don't know what they're talking about. They probably do one VA loan every 2 years. And because they don't know what they're doing, it is a highly problematic loan, and it's a really poor loan experience. And then the real estate agents get burned on it. But when you actually work with someone that does, last year I did 86 VA loans. When you do VA loans every single day, it becomes rinse and repeat, because they are definitely the best loan out there, the most lenient lending guidelines, the fastest closing ratios, everything about them. But I think it comes down to people that are just inexperienced in the product, do their first VA loan in 18 months and hate the process.
Okay. And I think that there's something to that when it comes to like JDA doing renos. I'm sure he witnesses a lot of people doing renos who shouldn't be doing renos. And I've asked him to educate me as best he can on the subject. I'm too stupid to, be taught. So there's been some speed bumps there. And I think a lot of that, and I know that you've gained a lot of experience recently in USDA shit too.
Yeah. I live in North Florida. I live in Jacksonville, but outside of Jacksonville is all rural. We do a ton of rural loans. The county to our north is 100% USDA eligible. The county to our west is 100% USDA eligible. The county to our south is half USDA eligible, and there is no county to our east because it's the ocean. So we do.
That's pretty rural, though.
Of USDA loans, I probably do 5-6 transactions a month of USDA. Phenomenal program. Very difficult to take the buyer and actually fit them in the box.
Yeah.
Because USDA has so many measuring points that if you are one tick of a set, I always tell people it's like trying to fit an octagon peg into an octagon hole. If there is one tiny little thing off, it's just not going to fit. And that's the way the USDA is. They're not doing mobile homes in the state of Florida unless it's a new placement. There's very tight debt to income ratio restrictions. There's household income limits. There's so many facets to it.
Yeah. But again, as you do more and more of them, as anybody does more and more of any specific niche, and boy, Jen, we had a guest that was real big on niche recently.
Jacob Mueller.
Yep. Then you gain that experience. You become an expert in that subject. You continue learning about that subject. When those little ticks change, now our income limit is $1,000, a mere $1,000 different than it was. You know it.
Yeah.
And yeah, Andrew, you could probably run through the ticks and know if somebody's going to be eligible or not right off the bat.
Yeah, and this business is very, very much about continued learning. You know, we all hate continuing education, mostly because CE is actually garbage.
It is.
What they teach us is
in our industry, it is. Agreed.
It is. The continuing education is absolute garbage because you don't utilize any of it on a day-to-day basis.
But on the bright side, it's the same garbage every year.
It is.
Okay.
It's true.
Whereas guideline continuing education is something that you have to.
You don't have a choice. That should be the prerequisite CE, yes. But
that should be. And for me, it's, I love seeing loan officers in some of these Facebook groups comment guidelines, that are four different variations old. They're still quoting the 4155 for FHA. And like to me, it's like if you're a loan officer, if you want to be a part-time loan officer and close one deal a month, knock yourself out. But if this is your career, this is your profession, be a professional, damn it. Learn your damn guidelines, spend your time, spend your energy, figure out what you're doing so you're not burning bridges, burning reputations, and putting a bad stigma out there that a particular loan type is worse than another.
Oh, and let's certainly not forget the adverse impact it could have on the consumer, the client, the borrower, and their home, and the biggest investment of their life. Yeah.
Well, yeah, they probably just sold their home. They're living in a hotel, and now they can't buy a home because you failed to understand basic guidelines. Congrats.
Oh, God, I'll bet that happens a lot every day, coast to coast.
Yep. I get those calls for the rescues. And that's another thing that I used to do a lot. If you see the shift in my social media, I used to always be the rescue guy, rescue lender. And that's a great way to build business, but that's also a really tough business to be in.
Yeah.
I'll gladly take on a rescue deal. If someone's got one falling apart, I'm gladly going to do it. Am I going to go out and actively seek that business? No, because that's a really difficult business. You're basically cleaning up the sloppy seconds of a loan officer that couldn't figure anything out, and 1 out of 5 is going to make it. And 4 out of 5, you have to be the guy that actually looks them in the eye and says, no, what they told you was incorrect, and here's why it's incorrect, and no, you can't be financed. And that's a really, really bad day when you have to do that.
That's a rough day. And yeah, I know we've bailed out a bunch of builders, lenders this year. We've bailed out a handful of deals from big box retail depositories. And yeah, I wouldn't go out there and promote the fact that if we can't do it, it can't be done. But that's kind of how it plays out. And yeah, I don't know that I would necessarily want to promote the fact that, hey, when your builder's lender screws this up, or when your big box retail depository screws this up, come check us out. I'm not sure we can handle the volume of business for one.
Yeah, I used to be that. I used to be on Facebook. Call me the second chance lender. Save my commission. No. At the end of the day, I'll gladly step in and do it, but that's not going to be the advertising piece that I target anymore. No, thank you.
Indeed. Well, this little episode ran by fast, didn't it? Holy cow!
Sure did.
I am so disappointed that we're not going to get to see you next month.
I know.
This, for those of you watching or listening, we do an annual conference, the Mile High Mastermind. This is the 5th year that we're going to do it next month. Andrew hasn't missed one yet, but he is a busy guy, as you guys can all gather. We had to pull teeth to get 30 minutes of his time on a Monday to rejoin us a year later for our podcast. So yeah, thanks for doing it, brother.
Absolutely. Let's do it again soon.
Yeah, hopefully your schedule will be a little more permissive. I know you've still got a lot in the pipeline for 21, both working and personal. Yeah. Yeah, Jen, you want to tell us some more about the mastermind and whatever else we would normally close out with?
Yeah, so you can text tips to 63566 to get everything you could possibly want to know about Just the Tips, including ticket information for the Mile High Mastermind. It is September 24th and 25th at the University of Denver. We're really excited for a new venue this year. It's 2 full days of workshop-focused material, everything from going through your website. We're actually going to crown the worst website of the group, and that's going to be a lot of fun. And then Adam and another.
I think I'm going to win that one today.
At the moment, yes. Okay. At the moment, yes. We're going to talk about team structure. We're going to talk about how to get published. Speaking of which, you can also get a copy of Adam's book at that text code. Lots of great stuff this year. We're really excited. So September 24th, 25th, there are still tickets available, and you can get all that and more by texting tips to 63566.
Cool. Thanks, Jen. And Andrew, thank you, man. This is
pleasure.
It's always a treat, and I'm sorry I'm not going to get to see you next month, although I do get the occasional surprise visit from you. You do spend quite a bit of time in Colorado. So we're very fortunate there. But thank you for doing this in lieu of us getting to see you next month. And we'll get you on the books for another episode soon.
All right. Take care, guys.
All right. Thank you.
Bye-bye.